Hi everyone, this is Paul Lang from Disciplined Trading Strategies with this week's Trade of the Week video. This is for the week ending 5/22 of 2022, and this time I'm doing a summary of a long-term position for a couple different reasons. I do this occasionally in the Trade of the Week. There's no reason the Trade of the Week cannot be long-term. A lot of people who are fairly familiar with DTS don't even realize that a huge part of trading me is a long-term. There's long-term trading, you may call it investing. There's also short-term trading, swing trading, day trading, whatever you want to call it. Most of the trades featured here are day trades, but this one here I want to feature a longer term, one to remind you that DTS has a service for long-term traders, and also because this was a nice trade that hit a big target on Friday, and I wanted to discuss some of the issues. I think there's a lot of good learning in here. So let's go through it. This is on a stock called ROST, R-O-S-T, and the entry date was exactly a month ago. It was on 4/22. This is based on a weekly DTS sell setup with an entry on a 60-minute secondary sign of weakness. Actually, it came down to a 15-minute chart to see it clearly. And the management was just long-term management and reward to risk. At the current time is 13-1. This is as of Friday. There was one target taken ready. Two targets are still open, so we'll take a look at that in just a minute. Let's first of all review what's going on for the free members of DTS this week. Busy week this week. Monday, Tuesday, Wednesday, something going on each night. Monday is a bi-weekly scanning event. You'll get invites to that if you're a DTS member. If you're not a DTS member, if you're seeing this on YouTube, go over to the DTS homepage and figure out how you can become a free member. Tuesday is going to be something called the Future of DTS. This is not an educational event. This is talking about the plans for DTS moving forward, and also afterwards we'll do a quick little review about DTS services. For those of you who are interested, we'll be talking about both the free services and the paid for services. This is not educational, so don't attend unless you have some interest in the topic being discussed. And Wednesday will be the educational event. This is going to be the 3 best and 1 worst trades of the year. I've done this before. It, of course, will be different because it's new trades. I think it's a fun event for people. Everybody loves looking at charts of trades, so it'll be a very educational evening. You can pause and read the slide if you want to. So long-term positions at DTS, since we're not day trading, we're not in a room, these come through a long-term trader letter, and there's also a text set out to notify people that this is happening. This, of course, is a long-term letter, so they're not trades coming out every day, of course. It's not swing trading, it's longer term. To give you some idea, there have been 74 letters issued this year, but of course a lot of those are just general updates, position updates, non-urgent type of things. There have been about 22 total positions going into and including this year, but remember some of those are stop outs, so they're not like they're being managed all the time. Typically, I have a max of 6 positions open. I think that's all you should work with, not dozens and dozens. So that's how this comes to be, email, text. Here's the important part of the email that comes out showing exactly what the trade is going to be. And naturally, as a long-term position, it's usually not an immediate type entry. Sometimes it's even the next day or the day after. So there's the notification. Here's the weekly chart. This is based on a weekly DTS sell setup. That blue line is not terribly important. Don't get all hung up on how it's drawn, where it's drawn, whether you include topping tails or not. Those are all silly questions. That line is just there as a little guideline for you, but it's a weekly sell setup. What matters a lot is the entry that comes up. The entry came in right in there. Hard to see, of course, on a big weekly topping tail. That's what happened after the trade was entered. Daily chart. The entry came after that gap down. The entry is going to come in that very first red bar right in here. I'll show you the details of that in just a second. Here's the only chart we're going to see targets though, because the intraday charts will not show any targets naturally. Target 1 was taken right there, and some of you may know why immediately, because this area right through here is the minor support area. And the way I phrase this is, if this trade was not going to work, if this trade was going to break its weekly downtrend, it would do it right here. So it's nice to take a third of the trade off the table there to keep the trade kind of safe, if you want to call it that. You don't have to if you're confident in the trade. I did do that here because we've been in kind of a squirrely environment naturally. I'm also able to do that because of the great entry inside of here. When you get a great entry, you're making more money on the way down. So that was about a 5-hour trade right to there for the first third. Then we let the rest go. Boom, 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 comes back. And then going into this day right here, the next day was going to be the earnings date for ROST. Now, I never take out a position into earnings right before. That's just a gamble. There's no way to trade successfully doing that. There is a way if you just simply look at the average market going up or down and take a small risk in a whole bunch of different positions in the earnings. Naturally, if you're in a very bullish market, net at the end of 2030 earnings that come out, they're going to be net positive, and if you manage your money properly, you can do that. But that's not really reading a chart. That's just playing the odds. There is no way to read a chart and determine what's going on in the earnings. Zero. I don't care who tells you differently. It's not true. What I do like to do, though, is hold in the earnings when I have some equity in the position and I feel somewhat safe. In other words, even if it gapped against me, chances are I'd still be green on the trade or just lose a small amount. And if it gaps with me, I feel very safe that way. Keep in mind when you're long-term holding that over the last bull market we've had here, that last 14 years or whatever, I don't know the exact number, but somebody did a study on this. Something like 90% of the gain that came from the bull market came overnight. In other words, it's not during the day, it's on the overnight gaps that most of the move comes. So if you want to be holding long-term, you kind of want to get these moves, because here's what happened in earnings this day. We gapped down to here. Now, I didn't have a target set. What I actually did was here is after we gapped down, I issued a letter saying to how to handle it this day, and targets 2 and 3 are still in play. Now, we may drop more and get even more, but right now that's about a 17R move for targets 2 and targets 3. The profit you see there is based on that as of right now. If it was closed out, where it closed on Friday. So naturally, anything could happen Friday. We could go higher. Target 2 would be trailed out, then there's also a trail on target 3. But if we go lower, this trade has the possibility to make even more money. The entry came on the 60-minute, really the 15-minute chart. There's the top of that topping tail on the weekly chart, just to keep you in tune there. We gapped down on this particular day, and after the gap down, we weren't able to come back and fill. We tried to bounce, and it was taken on what is called a secondary sign of weakness. So entry 105.18, stop 107.12. Target number 1 was taken at 95.74. You saw that on the daily chart. And then target 2 and target 3 are still open. You don't see where we are today because this hourly chart goes back to 422, of course. A little more detail on exactly what that entry was. Right there is where the entry was, and that's what's called a secondary sign of weakness. It's not a strategy, it's an entry concept. It's under these two bottoming tails. Turned out to be a great entry, gave some good confirmation, not much bounce. The trade seemed pretty safe fairly quickly. And of course, target 1, target 2, target 3 discussed on the last slide. Normally right here you see a slide for the DTS Trading Room for those intraday trades, but for the long-term trades is a long-term trader letter. You can get more information if you'd like about the DTS long-term trader by going to the home page and then simply looking and clicking up at the Trading Room letters tab that you see right there. Until next time, this is Paul for DTS. Good trading, everybody.